Hi all, welcome to Bond Bytes, a daily bond market highlights from INR bonds. I am Arjun Patsati, and in today's market, the notable feature is that the Indian rupee, is trending close to record lows, which it touched a few weeks back. It's closer to rupee 76 to the US dollar now, and the rupee has been weakening steadily. It's from a high strength of from a strength of around rupees 73 to 74 to the dollar. It's weakened to record lows of rupees 76. And why is the rupee weakening? This is despite the fact that bond markets are pretty much stable. The 10-year government bond yield today was largely flat, with yields down and holding steadily at higher levels, but not showing any signs of worries about inflation or Fed rate hikes or anything like that. While the Sensex and Nifty are obviously exhibiting a bit of volatility. And India CPI came in at below 5% for November, while core inflation continued to stay high at 6.19%. But the rupee is clearly, the chart is clearly showing that it's weakening, and this is despite the fact that India's macros are looking pretty much there compared to global macros, including the U.S. Federal Reserve. Inflation is below U.S. levels. The government finances are excellent and in good shape, while as fiscal deficit for the April-October period is just about 36, below 40% of total budget. And this is one of the lowest periods on record in terms of this number, which shows that government finances are very healthy. In fact, government had enough money to actually pay the states in advance for the taxes, devolvement of taxes, devolution of taxes. And with all this, forex reserves are extremely high at record high levels. Equity markets are doing extremely well, close to record highs, and growth prospects are also looking bright, with 9.5% growth for this year. So why should the rupee start to weaken? I think, this would be largely due to the fact that with RBI holding rates and the Fed looking to raise rates, given US inflation is at alarmingly high levels, there is a tendency by the market to see that there could be a move towards higher yielding US bonds if Fed rate hikes happen, and this could mean that the rupee could stand to lose out if rate differentials are narrowing between India and the US. But this is just a surmise. There is no clear indication of any of that happening as well. So with all this, it does seem as if the rupee weakening is a sign that either there is something the markets are seeing ahead, or there could be some temporary slow mismatch that could is hampering the rupee, because the macros clearly don't point out to a steadily weakening rupee. So given this, I think maybe the RBI is wanting to keep the rupee weaker to encourage exports, but I don't see them buying more dollars at these levels, given that there is anyway a dollar strength globally, and there is RBI need not intervene to do that. So difficult to say what exactly is the cause of this weakness, but it's something to be watched as we go along. Thank you very much for listening in. Do not forget to log into our Quick Invest platform, a retail digital platform for bonds, where you can invest in bonds with the most information, highest transparency, and easiest settlement investment processes. And do not forget to subscribe to our YouTube channel if you have not done so already. Thank you very much.